Is Solana about to sell off massively, and will XRP pump hard from here? Plus, this institution says Bitcoin is in a whole other universe because of this one thing. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz, in collaboration with Engine Starter, brings you an exclusive giveaway. Now get a free 1-month Altcoin Buzz Alpha membership that includes buy and sell calls, portfolio updates, airdrops, and IDO strategies, as well as new gems and Q&As. If you're an Engine Starter staker, hurry up, sign up, and get your cash back with the link in the description below. Bitcoin begins the second week of November, still holding strong near 18-month highs. In what analysis is increasingly describing as a change in sentiment, Bitcoin and altcoins alike are refusing to retrace gains that first kicked off over a month ago. Fidelity Investments is one of the largest asset managers in the world, with $4.5 trillion in assets under management. Recently, Jurrien Timmer, Fidelity's director of global macro, published a risk-reward analysis on different assets, including Bitcoin. According to Timmer, Bitcoin's risk-reward is in a different universe. Essentially, financial institutions analyze risk and reward on financial assets across annualized volatility to annualized return. Annualized return is the average amount an investment generates each year over a given period. Higher annual returns imply better long-term profitability. On the other hand, annualized volatility measures the price fluctuations of an asset over a year and acts as a proxy for investment risk. High volatility signifies larger price swings and hence more potential for loss or gain. Moreover, analysts often evaluate volatility using standard deviations. A more significant deviation shows higher volatility and vice versa. Notably, Bitcoin's risk reward is set at around 60% annualized return over a 69 standard deviation for the annualized volatility. Interestingly, the second best performing asset is the SPX on the stock market, with a return going from 16 to 26% and a risk between 18 to 24 standard deviations. China has had the second higher risk with the annualized volatility between 25 to 28, while accruing negative returns in the 3-year period. Hong Kong's security regulator, the Securities and Futures Commission, or SFC, may allow retail investors to buy spot crypto ETFs. The SFC CEO Julia Leung writes that the regulator welcomes proposals using innovative technologies that improve efficiency and quality of customer service. Although both the US and Hong Kong allow futures-based ETFs, their adoption has been relatively modest compared to the broader fund industry. Hong Kong currently has ETF listings such as Samsung Bitcoin Futures Active, CSOP Bitcoin Futures, and CSOP Ether Futures, with a total combined asset value of approximately $65 million. In September, Hong Kong took first place in the ranking of countries and territories that are most prepared to implement cryptocurrencies. Its victory was ensured by a zero tax rate, a large number of cryptocurrency ATMs, and crypto companies. Investment research platform Game of Trades suggested that major economic volatility is on the horizon thanks to a rare contraction in U.S. consumer credit. They said this has happened only 3 times in the last 75 years, referring to savings as a percentage of U.S. national income. The 2 other occasions coincided with the 2008 global financial crisis and the March 2020 COVID-19 crash. Make sure to also check out Randy's TA video on our Altcoin Buzz trading channel to see how he's trading altcoins right now. Our partners at DexCheck help crypto traders and investors in many ways. Their app supports over 10 blockchain networks, including Ethereum, BSC, Polygon, and Arbitrum. Their suite of applications includes Telegram trading bots to AI-powered trading analytics software. DexCheck's Telegram bots have seen a spike in user count over the past 3 months, and this is both due to increased awareness of these bots and how effective they are. The project has only one goal in mind: to help cryptocurrency investors through accurate and well-sought-out insights. DexCheck hopes its tools will reduce the number of human-related investment errors. DexCheck's flagship Insight GPT uses artificial intelligence to detect investment opportunities by using top trader data and analyzing recurring trades to spot high-profile trades. This type of pattern recognition is something AI was born to do. Then, you as the trader get a notification of these trades, and these insights are actionable. DexCheck fits into 2 crypto narratives that investors like right now: artificial intelligence and trading bots. Their Smartfolio is another Telegram-based application on the DexCheck ecosystem. Smartfolio is an AI-powered asset tracker and portfolio manager. It provides real-time information on an investor's holdings. You also get fast prompt alerts on price developments. DexCheck will launch its initial private sale offering in November and will feature new products with high potential. The launch is expected to boost demand for their DCK token, as only DCK stakers will have access to the platform. To find out more about DexCheck, check out the link in the description below. The Arbitrum Foundation said new Layer 3 networks created via the project's Orbit program can now settle on the Arbitrum mainnet. Orbit is a program that blockchain developers can use to spin up their own Layer 2 or Layer 3 networks using Arbitrum's technology. Previously, these new Layer 3 networks were only settling on Arbitrum Test Network. The Orbit program was one of the first announcements made by the Foundation when it was formed in March in an effort to decentralize Arbitrum. According to Offchain Labs, Orbit lets developers create your own dedicated chain that settles to one of Arbitrum's Layer 2 or Layer 2 chains, whether it's Arbitrum 1, Arbitrum Nova, Arbitrum Gorelli, or Arbitrum Sepolia. Projects including Cinder had previously disclosed that they had chosen Arbitrum's Orbit network to build on. The move comes as the biggest developers of Ethereum Layer 2 networks, including not just Arbitrum, but also OP Labs, Polygon, and Matter Labs, are making their technology available to builders to clone or modify for their own use. Orbit is one of many customizable blockchain stacks that have come to market over the past few months. Arbitrum's competitor, OP Labs, behind the Layer 2 chain OP mainnet, has had its own version of a customizable environment called the OP Stack, which currently powers crypto exchange Coinbase's Layer 2 network base. The FTX estate moved 750,000 SOL, worth about $30 million, to crypto exchanges Binance and Kraken on Monday, the first step ahead of a possible sale, driving the price down 5% over the past 24 hours. So far, the bankrupt crypto exchanges estate has moved $102 million in SOL to exchanges in a series of transactions that may exert selling pressure on the token. SOL is the largest asset on the FTX estate's balance sheet, coming in at just over $1.16 billion. While the token has risen nearly 70% during the last month and is up 10% year on year, with the anniversary of the FTX collapse approaching, the price has dropped 15% from a 14-month high on signs a recent rally may be losing momentum on looming selling pressure. Unstaking and moving tokens to exchanges is the first step in liquidating assets, but the estate hasn't sold any yet. Bankrupt crypto exchange FTX also recently filed in Delaware bankruptcy court to sell certain trust assets worth $744 million owned by Grayscale and Bitwise. According to a joint statement from FTX and its debtors, this initiative will help prepare for payments to creditors in US dollars and allow debtors to move to sell trust assets at lower prices quickly. Crypto tracker Whale Alert recently unveiled data showing a whopping XRP token transfer made via an unknown wallet to a centralized exchange named Bitstamp. As of today, November 6th, the colossal whale movement caught the eyes of traders and investors alike, as it recently transferred over 28 million XRP tokens to Bitstamp. According to Whale Alert, another unknown wallet today transferred a whopping 23.8 million XRP tokens, amounting to over $15.6 million to Bitstamp. The same wallet made massive XRP token transfers to centralized exchanges Bitstamp and Bitvavo, transferring over 50 million XRP tokens. At the time of writing, the wallet has transferred more than 78 million XRP tokens to centralized exchanges. A series of transactions that were made by unknown wallets portray that there might be a possible sell-off of the tokens, resulting in the slump of the overall XRP price. As of today, November 6th, the XRP price witnessed substantial gains and surged 7.5% in the past 24 hours to over 67 cents, along with a massive gain in the past week. The gradual surge in XRP price comes in alignment with the recent advancements made by the community to build up support for the token. Despite whales dumping XRP tokens to centralized exchanges, the possible sentiment of a bearish market continues to subside. That's it for your Altcoin Buzz News update. I'm Cody Buffington. Thanks for watching.